On the 15th of March, Jeremy Hunt is going to reveal the UK government's spring budget for 2023. And following some of the recent headlines like this, the government announces surprise January budget surplus after record income tax haul. I've seen speculation about the fact that the government may now have enough money to announce some big schemes, potentially something to prop up the housing market. Now, I do not think this is going to be the case. And in this video, I'm going to give you 5 reasons why I believe the UK government are going to do absolutely nothing to help the housing market in the spring budget. So the first thing I want to take you guys over to is the gilt yield market. So let me just explain what a gilt yield is. So a gilt is a bond. So a bond or a gilt is the same thing, it's just different terms for the same thing. So a gilt is issued by the UK government when they're selling debt. And when people don't really want to buy UK government debt, the yield has to go up to make it more enticing for people to buy that debt. So usually if the yield's gone up quite a way, it means people aren't really a fan of buying UK debt. And with the Bank of England no longer being the biggest buyer of government debt, people aren't overly enthused about buying UK gilts at the moment. And if we look at this chart, we can see that the yield rates, so basically the interest rates that's paid on those gilts to make it more appealing to investors, has gone up to, I would say, worryingly high levels, similar to where we were just after the mini budget. We're actually above where we were before the mini budget. So that gives you an idea of where things are. And if you go back through some of my recent videos, and I've been looking at this and the swaps, I talked about how the mainstream media was covering this decline here as if this was the way things were going to continue. People were talking about interest rates coming down further. And I always maintained that we were still in this uptrend. And sure enough, it looks like this uptrend has been held. And we're going to continue, I imagine, zigzagging up for a bit longer. So this is the first reason why I don't think the UK government can actually do anything major for the housing market in the spring budget, because they basically can't afford to borrow a lot more money because it's going to cost them too much money. They'll have to pay really high gilt yields on the debt they create, and they're not going to want to do that. And the last time they tried to do it, well, we know how the markets reacted. Things got pretty sketchy for a few weeks back at the end of September and October last year. So that's the first reason. And the second reason, following on directly from that, is the actual overall state of the public sector finances. So at the moment, here we go. Let's blow this up a bit for you guys. Public sector net debt at the end of January 2023 was 2.5 trillion. That is a huge amount of money. So, or around 98.9% of GDP, with the debt to GDP ratio at the levels last seen in the early 1960s, when we were still paying off stuff from World War II. So the public sector finances are not in good shape. The markets do not have confidence in the UK or the UK government. That's why they reacted how they did at the end of last year, because they didn't have confidence. So I think the chances of them all of a sudden announcing some big scheme that's going to cost multiple billions to support the housing market is very, very unlikely. And if we go back to this original headline about the government announces surprise January budget surplus, if we put that into context, in the financial year to January 2023, the public sector borrowed 116 billion, which was 7 billion more than in the same period last year, but 30.6 billion less than the forecast by the OBR. So the only reason this surplus is seen as good news is because the OBR got their forecast so badly wrong. We actually have less of a surplus than we did in the previous year, and I think that's represented in a bar graph. Yeah, here we go. So this is what they're reporting as good news, right? A smaller budgetary surplus than what we had in January 2022. And remember, this followed a massive borrowing of about 25 billion in December. So when they talk about this surplus, really, it's not surplus, it's just slightly less debt overall for the year. Over 100 billion borrowed for the year is a crazy amount. So that's why, again, I do not think the government has the money or the confidence of the market to be able to do anything big to support the housing market and potentially prevent the crash that we all believe has started and is going to play out over the next year or two. The third thing I want to take a look at is actual house prices themselves. And remember, the official ONS, the government figures, still show that average house prices increased by 9.8% in the 12 months to December 2022. So they're still showing annual increases in their figures, and the average UK house price was 294,000 in December 2022, which is 26,000 higher than 12 months ago, but a slight change from last month's record high of 296. So the official figures are still showing a year-on-year increase, and this is only the first month they've shown a very small downturn in the month-on-month figures. So the people in government are likely to be relying on these figures. They're probably not going to be trying to front run this like we are by looking at Nationwide and Halifax and Rightmove and Zoopla and trying to get an idea of where things are going. So from a government's perspective, why do I need to invest billions of pounds in this market when actually, you know what, year on year house prices are still up and month on month, well, they're barely down. So the fact that official house prices lag so much, the government may not feel inclined to act on it yet. They probably will wait till things are much worse, if they do take any action, of course, but I do not see it being in this budget. The fourth thing, we are not due an election until the latest of January 2025. So we are not in an election year, or we're not supposed to be in an election year with UK politics. Who knows what will play out over the next 9 months. But I'm fairly confident there won't be an election this year. And if that's the case, they're going to save any of the big announcements until next spring, so they can go into the election with their war chest of tax cuts and support for the housing market and whatever else they come up to try and win votes. So that's a false thing. There shouldn't be an election this year, and so in my opinion, they're just going to try and get through this year unscathed, try and save up a bit of a war chest, and by war chest I mean just a bit less debt than they're expecting to have. Then next year they'll announce some measures that hopefully will appeal to more voters. At least that's what I think they will try and do. And then finally, Help to Buy officially ends at the end of March, and the government has confirmed that they have no plans to renew this. So in October 2018, the government announced that Help to Buy would run from the 1st of April 2021 to the 31st of March 2023. There are no plans to extend or replace Help to Buy equity loan. And even if they were planning on replacing it, I don't think they're going to do it now. If we look back to when they launched it originally back in 2013, that was 4 or 5 years after the previous crash. There's no benefit really to the government now rolling out some sort of support scheme that would involve them taking on some of the liability of the depreciating assets that we're going to see over the next year or two. So I think if they do announce some sort of scheme to help either first-time buyers or people buying new build properties, I don't think that's going to come for a couple of years until the real damage has been done to house prices, so that when they do get involved, their own equity, so to speak, or their own investments won't be as much financial risks as they would be if they tried to bail out people now. So that's my overall take. I don't think there's going to be any major bailout to save house prices. Now, I wouldn't be surprised if they announce some sort of scheme to protect people with mortgages to try to help them avoid evictions. So maybe something that allowed them to extend the length of the mortgage more easily, or maybe something that made it put more onus on the lenders to be flexible with people that were struggling. And that may help prevent some evictions and some forced sales. But overall, I don't think any of this is going to change the sentiment of the housing market. We've covered it in previous videos again and again, so I'm sure that most of you guys are familiar with that. If you're not familiar with that and haven't seen my overall thoughts on the housing market, check out the video from last week where I cover all of the things that I think add up to make this crash potentially be worse than 2008. So if you haven't watched that video yet, I'm going to pop it up in front of me now, and I'll see you guys over there.